Hello everybody and welcome back to another wild week on Wall Street. My name is Tagatha and I'm going to be giving you the lowdown on some of the most exciting stuff that has been going on this week so far. We are going to kick things off with our lovely monthly heat map in front of us, which as you can see is actually not looking too bad. I think with any luck we may be able to claw our way into the green for July. If we slide down to a weekly heat map, things aren't looking quite as good. A lot of investors spent the first half of the week kind of waiting patiently to see what inflation was going to do. That data came out yesterday and inflation is sitting at a whopping 9.1%, which is its fastest rate since 1981 and quite a lot higher than the 8.8% that people were expecting / hoping for. It sent the Treasury yield curve inverting by the most in nearly 22 years. On the other hand, core CPI data, which excludes energy and food prices because they are famously volatile and the Fed also doesn't have that much control over them, core CPI dropped for the third month in a row. So that's a little bit of positive news. What has been interesting to watch during this time is what people are considering as a good hedge against inflation. Spoiler alert, it's not gold. I say spoiler alert because gold traditionally, or historically anyway, has been a very popular hedge against inflation. However, the last 4 or so months, it has been slowly but steadily, or steadily but not so slowly rather, declining. We can see that last week was particularly bad. We closed down 3.77%, and things have just continued to get worse and worse by the day, especially after yesterday's CPI reading. Bitcoin, another historically popular, to some people anyway, hedge against inflation, is also sitting around 18-month lows. What is putting pressure on these is the fact that the dollar is absolutely skyrocketing. As you can see over here from this gorgeous chart, it has been hitting fresh 20-year highs almost every day this month. The euro actually fell below parity with the dollar this week. We said in our previous video, but we'll say it again, the dollar is backed by one of the largest gold reserves in the world, and the Fed, or rather America's central bank, is one of the most hawkish globally towards inflation right now. So people are looking at that and they're thinking, that looks like a safe place to put my money. But what's important to note is that the market is super volatile right now, and this is just a perceived hedge against inflation. It's where people think that their money is safest right now, not necessarily that the gold or the dollar has become any less or more strong. Things can change very quickly as sentiment through the year towards inflation and the economy changes. It's likely that gold's sell-off and the dollar's rally will see some sort of change in sentiment. So definitely worth keeping a very close eye on there because things can change very quickly, as I'm sure you know. Another thing that changes incredibly quickly, as we're learning, is Elon Musk's mind. Yes, the billionaire has, in a move that has shocked pretty much nobody, decided that he is out of his Twitter deal. He sent, his legal team anyway, sent Twitter a letter last week Friday saying that they had not fulfilled their contractual obligations and he was out, done, peace out, see y'all later. What did Twitter say? Nice try, we'll see you in court. Their CFO, Brett Taylor, posted on Twitter that the board is committed to carrying out the transaction at the agreed upon price with Elon Musk. It's important to note that they said at the agreed upon price because Twitter's shares are trading somewhere around $34, $35 maybe, quite a lot lower than the $54.20 that Elon offered to buy them for. So Twitter's like, no way, we want the whole $44 billion. You put us through hell to get here. Give us our money, basically. They have filed a case in the Delaware Court of Chancery, which I personally think sounds like a Harry Potter name, but there we go. And they have launched a whole load of accusations at Elon Musk. They've said that part of the reason that Twitter's share prices have declined is because of Musk himself, because he's been so vocal online about the behind-the-scenes dealings of this merger. He has given a hint here and there. I think we can safely say that he's potentially not so keen to buy the company anymore. The reason he's given for backing out is the bots on the platform. He says that more than 5% of the platform are fake accounts, spam accounts, etc. Twitter says it's only 5% and they get rid of loads and loads every single day. Apparently the two could not come to a data sharing agreement. They didn't send over the things that Elon Musk wanted. Elon Musk wasn't happy. And yeah, they've now filed a case against him, and anything could happen, really. He is already in trouble for posting this tweet, which is actually kind of funny, to be fair. But people are saying that they think he's now trying to use the land's higher courts in some sort of discovery process to actually figure out how many bots are on the platform, instead of because he actually wants to drop out of the deal. You never know with him, I'm not going to lie. There has been a lot of back and forth, and there are tons of ways this could play out. Tons and tons, more than I have fingers and toes. Some of the most likely are either that the court will back Twitter, which a short seller, Hindenburg Research, actually said they think will happen. They said that today. Either the court will back Twitter and force Elon Musk to pay the full $44 billion. The pair could also settle, which doesn't really seem like Elon Musk's style, but you never know. They could settle and come to a lower price agreement. Or a white knight investor could come in and take the lot. There are a ton of ways this could play out, and it's very definitely worth keeping an eye on, because things are going to get spicy in the next couple of weeks. I'm sure the Netflix documentarians are already writing the script. But that's enough of that for right now. We have another separate exciting deal to tell you about from a small EV company called Canoo. Now, Canoo was part of the whole 2020 SPAC boom. They closed their merger in December 2020. And if you scroll on back here, you can see they had a very eventful debut on the market. However, since then, things have not gone as well. If we look at Tuesday's price action, though, you can see that they jumped a huge 110% during Tuesday's trading before they closed at 53%. Been a little bit of movement since then, but they've pretty much stayed up there. The reason that jump happened is because of a very exciting deal with Walmart, massive retailer, big news. Walmart has basically agreed to buy 4,500 of Canoo's electric trucks to use for its delivery. They are trying to go carbon free by 2040, as are a lot of other big retailers and companies. And they've also signed an option to buy up to 10,000 vehicles. Now, this would be an exciting deal for anybody, but it's particularly exciting and needed, I think you can say, for Canoo, because they have been really, really struggling, as you saw from their share price. They have faced warehouse fires. They saw a previous deal with Hyundai completely collapse. What else have they done? Oh, they actually haven't yet started producing these vehicles they're going to be selling onto Walmart, nor have they started selling to consumers either. They said back in May that they actually only had about $105 million in cash on the books, and that they weren't even sure they were going to make it through at all. So they were in desperate need of this capital. It's fantastic news. Investors are kind of thinking, if this all goes well and they can pull it off, there might be more big deals in their future. Probably not with big retailers, because part of Walmart's deal was actually that Canoo is not allowed to do any business whatsoever with Amazon. But plenty other retailers out there, plenty other deals to be made. And you can keep up with all of that and more on our Snaps page over here. We also send a daily email in your inbox every day by 9 a.m. And until then, make sure you're keeping up. And always remember to look first and then leap.